Embedded insurance continues to gain interest among insurers given its potential to become a light touch distribution channel. But some challenges remain, and in some cases may vary by geography and even by line of business. I'm John Weber for AM Best TV. Here to discuss these issues as detailed in a new AM Best report, Eli Sanchez, who joins us from Mexico City. And Eli, can you give us a brief overview of where things currently stand in the embedded insurance market in terms of interest and its potential?
There's been growing interest, especially in the US. It can be seen as a way not to disrupt the market, but to complement it and to reach potential new segments, niche markets, and also to help the gig economy to have coverages that could be very costly for them. The potential is huge, given that some experts like Simon Torrance estimate that this is a market that could really reach an important number for 2032. So there's interest, there's the potential, but we still need to see how more efficient tools are developed. Right now, making it in a traditional way, just finding a partner and asking them to distribute your product, it's still something that it's difficult to develop. However, when we look at the new digital solutions that have been provided by external parties, those can be the way that can be done in a cost-efficient way that can really reassure loyalty between the parties.
At AM Best's recent review and preview conference, there was some informal polling of top-level executives regarding some of the loftier growth projections. Can you take us through some of those results?
So these results were made by an independent party from AM Best. So Simon Torrance is one of the main researchers in the topic, and he has been working on how big the market can be. He has made some adjustments, and this is what we are presenting. While the market can be this big, it's a challenge to reach those levels. First, there's have to be the acceptance between the insurance company to really have the risk appetite to do it. Then there has to be the acceptance of a distributor, meaning even a partner or even an API to put on place that solution. And on the consumer end, there has to be interest and acceptance of the product. So I think even when those numbers take us to maybe 2032, maybe it could be a long way from those projections. However, it's not only the size of the market that matters, it's the diversification of revenue and the education of uninsured segments to have a reach to insurance products. So this could make way, maybe not for in the next 10 years, but maybe in the next 20 or 30 years on how insurance is consumed by the consumer and how it's distributed for specific segments of the population that are maybe not so interested or don't have the economic capacity to buy a full policy.
Eli, what are some of the key challenges going forward with respect to making this a more viable distribution channel?
Plenty. I think regulation is one of them across the world and across different geographies. Regulation is different, so I think regulators have to make sure that this is a fair product offering for everyone, for the insurance company, for the distributor, for the consumer. Then we also have the how technology-wise are all the parties involved in distributing the channel. If companies decide to go with their own distribution systems, then its partner who is going to distribute it has to agree on how it's going to work technology-wise. If it's going to be more easily distributed, like from an already existing API provider, then that can really help companies and distributors to solve that problem. So technology and regulation are two of them. In the more traditional way, loyalty amongst the distributor to the insurer, it's key. This is one of the main reasons many companies in Latin America are not really interested, because they see that it's an expensive channel to do it in the traditional way, and that can be easily switched to another insurance company by the distributor if they see a better deal. So I think what would really make sense, and it's to find a solution that it's well regulated, that already exists, that will open the market to the distributor and to the insurance company, and that it will be easy to handle technology-wise in terms of generating the premium and in terms of servicing that premium for claims and service overall. So I think those are the four main challenges that currently are facing companies to make it a viable distribution channel.
Eli, thank you so much for taking the time to speak with us today.
Well, thank you very much.
I'm John Weber for I Am Best TV.